with all due respect, okay, this is a load of bullshit. Hey everyone, TREBB's June stats are out, and the question is, do we celebrate or not? I'm Vince Gaetano. Thanks for tuning in. What a week. We got a jam-packed session today. We're going to start off with the TREBB June numbers. And boy, what a stellar report on their market watch, okay? Now, I always kind of chuckle when I read this because they always try to spin it like things are going very well, okay? So I want to read what the TREBB report says, and then I'm going to dive into the month-over-month numbers, and I'm going to let you know if we're really trending in the right way, okay? So listen to this. Home sales and the average selling price in the Greater Toronto Area in June remained above last year's levels. The seasonally adjusted average selling price and the MLS Home Price Index benchmark were up compared to the previous month. With this said, home sales were hampered last month by uncertainty surrounding the Bank of Canada's outlook on inflation and interest rates. Furthermore, the year-over-year increase in sales coupled with the decrease in new listings mean market conditions were tighter this past June relative to the same period last year. Now, all that is kind of positive, right? But here's the deal, okay? Here is the deal. We had 7,481 sales in June. Last year, 9,012. We're down 17% in sales, okay? Active listings are 14,107. Last year, they were 11,868, up almost 19%. And the average price on a month-over-month basis is down slightly at 1.1%. So all that tells me things are not trending in the right direction, but the commentary regarding these market watch reports always have a positive spin. Who gives a about year-over-year numbers? I want to know where we're trending in the past couple months. Where are we going? And with rate increases, as we saw in June, it's really starting to cause some problems with the market as people are starting to realize there are further rate hikes coming. And chances are we're going to see another one on July 12th. So it's really interesting how they really try to positively spin this. You know, they're representing realtors. Realtors need to always push a positive momentum. And the reality is it's not happening, folks. We're starting to see the cracks. And these cracks are starting to really impact the real estate market. And speaking to agents, they're telling me the market's dead. Okay, it's really tough right now. And it's funny watching realtors on BNN Bloomberg talk about, oh, things are really good. We still got bidding wars. Yeah, maybe in certain pockets that are very desirable. But for the most part, things are really starting to soften. Okay, and it's important that we be honest with people. We let folks understand what the challenges are. And we will possibly see a rate increase next week on July 12th. Now, why do I say that? The bond market has been moving upwards. Today, it almost hit 4%, okay? This afternoon, it leveled off at about 3.92, but it almost hit 4% earlier in the day. And that's up from 378 last week. So that quarter point is built in, possibly a further hike in the fall. So tighten the chin straps on the helmet, folks. It's going to be a bumpy ride, and we're starting to see things really play out as things get tougher. Disposable income is severely impacted, and people's cash flow are just at a point where they're struggling. So that leads me to TransUnion. They came out with a quarterly report. This is the Q1 2023 Consumer Pulse Survey. 1 in 4 Canadians unable to pay their bills. 1 in 4 Canadians, okay? 49% of households attribute inflation impacting their finances. So thanks to the carbon tax, thanks to everything going up, it's really causing havoc. But, you know, the government's really excited about this grocery rebate that's coming out this week. So, you know, look out for your $100, $200 rebate that's supposed to hold you over for the year. It's a gong show. This is going to be a gong show. 73% in the survey noted they're making changes to their purchasing behavior. And 53% are cutting back on discretionary spending. So folks, this is getting to a tough point. And we're seeing people starting to miss payments, okay? Which leads me into a very key point. The rights you have when dealing with debt collectors. This is right off the Government of Canada website, okay? So know your rights. If people are chasing you down for payments, understand that they're not allowed to contact or try to contact anyone about information about you, okay? They can't contact your employer, can't contact your neighbors. They can't contact you on holidays. They can't contact you on Sunday unless it's between 1 and 5 p.m. They can't call you before 7 a.m. They can't call you after 9 p.m. They can't use any communication that would constitute harassment, including threatening, profane, intimidating, or abusive language. They can't use undue pressure. They can't make any public or threatening to make public your failure to pay. And they can't misrepresent the situation or give you false or misleading information. So, go to the Government of Canada website, look up debt collection, know your rights, okay? More and more people are going to need to know what can and cannot be done. And, this is going to be a problem. So, folks, know what they can and cannot do so you're fully aware and people can't make you feel worse than how you're already feeling. Big talk this week about the Financial Consumer Agency of Canada. This is the FCAC. They have asked the banks to help consumers in tough situations. And they are suggesting that banks should do certain things, okay? And what they have suggested is they want banks, okay, this is a federal agency. They want banks to waive penalties on distress sales. They want banks to waive penalties on lump sum payments for those that are trying to catch up on these extended amortizations and stuff. They want the banks to waive internal fees for up to a year. They want to waive interest on capitalized interest added to the mortgage. They want to make sure that a bank can't adversely affect the credit ratings of people that have missed a payment or have made partial payments. They want amortizations extended to the maximum available, and they don't want banks to charge high rates on renewals. Now, with all due respect, okay, this is a load of bullshit, okay? The banks have one master, and that's the regulator. The regulator is the Office of the Superintendent of Financial Institution, OSFI, okay? That's the only master the banks have. All this stuff is all lip service, smoke and mirror bullshit that the government's propped up to make people feel good that they're not going to be harassed. Like, are we going to get to the point where we're going to hand out participation ribbons to people who bought a house and struggled to keep it? People need to take on responsibility. And most people that are in this situation probably shouldn't have been in that product to begin with, okay? You know how I feel about the static mortgage payment product? It's a terrible product. It was poorly designed, and the banks should have been aware of what was going to happen. When you hit the bottom of rates and people are going into this product in droves, you know it's not going to end well, because those fixed payments are going to result in extended amortizations the moment those rates go up. So, I don't want to belabor this, but the reality is this is a bunch of lip service. I kind of chuckle when I read it because, quite frankly, I don't know how this Consumer Agency of Canada is going to enforce it. Okay, what, people are going to complain, and what are they going to do? So if the banks do all this, who do you think is going to pay for it? The next guy. You want them to waive fees on a penalty on a product that's been securitized, and they have to pay out that interest to the other side of the balance sheet? Somebody's going to pay for it. That means higher rates. Higher rates are going to be coming for a longer time. So very, very strange. And it's really funny how the government's now pitting different ministries and departments against each other. It makes no sense. Makes no sense. But then again, this is where we're at with this government. You scratch your head and wonder, like, how are we going to get out of this? Like, folks, we need to do something about it. We need action. We need accountability. We need folks that are adults in the room, because this seems like fucking playground banter back and forth. He said, she said. Let's get to solving problems. Let's come up with solutions. Let's implement them, execute. Let's move. Our GDP is the worst in the G20. Okay, like, the government has played this GDP game. They're saying, oh, our GDP is growing. On a per capita basis, we are the most inefficient group in G20. GDP is propped up with immigration, but on a per capita basis, we're shrinking. We're worse. So don't fall for it, folks. Drill down, ask the right questions, push your politicians to make better decisions, and make them accountable. We need people to answer questions. I've been tracking used Porsche sales since last September. And when I started doing it, I basically chose a data point to help us determine if there's any pressure on people getting rid of their toys. Okay, I just picked Porsches because I like Porsches. And I do a search of a 100-kilometer radius of where I sit at Dufferin and Orphis, just south of Yorkdale at 401 in Dufferin. And it's startling because over the last few weeks, we've seen an increase of used Porsches for sale. This week, we hit over 1,200. Okay, last week we're sitting at 1,198. The week before that, we're 1,190. This week, as of this afternoon, there are 1,213 used Porsches for sale, which gives me an indication that people's July 1st payments went through. People are starting to realize, holy shit, I gotta get rid of some toys. And the toys are the first to go. You're seeing more garage sales. You're seeing more things being sold on Kijiji and Facebook Marketplace. And we are starting to see people's cash flow get impacted. Okay, discretionary spending's down, cash flow's getting tight. People need to scrape by, get rid of payments they don't need, cash in their savings, scrape through with some assets that they could turn into cash to help them get through it. People are starting to feel the pinch. And as more and more renewals come up, you're going to see more people being impacted. As I pointed out a few months ago, we have seen 35%, back in May, 35% of Canadians have gone through a renewal where their payments have gone up, okay? And by the end of this year, we're going to see 47% of Canadians go through a renewal that's going to impact their payment negatively, which means their payment's going to go up, okay? And by the end of next year, we're going to hit 65%. So as you could see, we're starting to hit the peak renewal pain, okay? People are starting to come up for renewal. They're starting to feel the pinch, okay? And you know, we're seeing it all the time. We're helping these folks through it by accessing equity, by releasing some opportunities within their situation to get them through it, but it's getting more and more difficult. And I always point out, respect the lag, folks. You have to respect the lag. These rate increases take a while to filter through the system and do what they're expected to do. And we're slowly getting there. We're starting to see things break. We're starting to see delinquencies creep up on the credit card and loan portfolios. We're now starting to see some cracks on the mortgage side, more power sales popping up, more forced sales. We came across an individual. We did a little private about a year and a half ago. And back then he was in a CIBC variable on his first mortgage. He was at a 146, I think, 1.46%. He had 18 months left on it. He was now coming up for renewal. His payment spiked on an $850,000 mortgage to a point where he had to call and say, hey, Vince, can you ease up on that July 1st payment, give me some relief? And I'm like, whoa, why? I can't afford my payments. I got to look at selling. I got to look at refinance. I got to do something. So people are starting to struggle. People are starting to really feel the pain of these rate increases. And it's concerning because it's going to impact listings, it's going to impact sales, and it's going to impact values, because as more and more listings hit the market, buyers are going to have choice. And buyers only have so much capacity to borrow, right? So they're only going to buy within their limits. And at these rates, who wants to borrow a lot? They want deals. They want to make sure they buy within their range. Now, it's been a crazy day today. I had a chance to, I was invited by a good friend of mine, Ron Butler. For those of you who are in the space, everybody knows Ron Butler. He's in the discounting mortgage space. Great friend, longtime peer. And he had me on his podcast, The Angry Mortgage. And we talked a lot about, people stuck, people that are not rehabilitating themselves from the private market and graduating to the alternative space, which then in turn graduates to the prime space. Everybody's moving backwards, and it's not good, okay? And people need to realize you can't go from private to private. Your equity gets eaten up, and these private lenders, there's three types of private lenders. There's snakes, there's scorpions, and there's sharks, okay? The shark being the worst one, because as you're trying to stay away from them and swim away, you could drown too, because you're panicking. So you gotta be careful who you're dealing with. And it's really important that you understand your situation and you cut your losses. And selling and taking that equity off the table is not a bad move, because you want to be in control of your situation. And we're helping folks formulate different scenarios, different options, and they make the best decision for them and their family. And if you have somebody out there that needs a hand, please reach out to our team. We got a great group. I'm here to help. We're here to hold your hand and guide you through what would be best for you in these tough situations. And we're spending a lot more time per file because it needs the attention. It needs the detailed analysis and the assessment to properly vet through options that make sense and protect equity, put you in a better frame of mind, and eliminate anxiety that a lot of people are dealing with today. So for those of you that need the help, please reach out, be happy to help. Now, this morning we had a presentation by one of our lenders on reverse mortgages. EQ Bank came in, and I heard one of the most powerful stories from Shan, and I want to share it with you because I never really felt the impact of how a product could help somebody. And it was a client, she was a widower. She couldn't renew her mortgage with TD Bank. It was a small mortgage. It was like 125 grand, 140 grand. And she got a renewal. Her payment went up $450 from what she was paying to what the renewal rate is. She wanted to look for an opportunity to refinance or something. TD couldn't help them. Client was told, listen, why don't you try a reverse mortgage? It might help you out. And sure enough, she did take out a reverse mortgage. And she ended up calling EQ Bank and said, listen, I really want to speak to a manager. I want to share a story. And the client said, the underwriter didn't really know why, but they put him in touch with this person. And this person said this client was so grateful. And she was so grateful because she could have really used this product a year ago. And the last year she was caring for her husband who had passed away. And things were so difficult because they had lost their income that she was only able to feed herself once a day. And if she knew about this product a year prior, she could have made her husband's last months and year a lot more comfortable than it was. And when he told the story, it was the first time I had goosebumps. It really moved me. And, it's so important that people understand what opportunities exist and what options are out there to help them. And, you can only do that if you really drill down into a person's finances and really get into the details of what pressures they're feeling, what struggles they're having. And you can only do that when you take the time to drill down and fully assess a client situation. I think we do that very well here. We're not a quick fix. We're not, call us, bang, we'll do what we can. We really want to see what options are available. And in some cases, it's not always a good answer. Like maybe it's time to sell. We had a client who wanted a line of credit. And he wanted a line of credit because he's thinking of putting a pool in a couple of years. But he had an existing mortgage at 226 that had about 23 months left on it. And I said, well, you know what? Why don't you just consolidate? We'll blend the rate. Let's forget about the line of credit now because we'd have to go to another lender. And let's just get you through the last little bit of your term so you could fully take advantage of that low rate on that money so you could get the full benefit of a 5-year term at the 226 rate. Like, it's a great rate. Why would you give it up? And we could look at that line of credit when you're done. And, from my perspective, I don't make as much. I don't get compensated on the full amount. I only get compensated on the increase. But I'm in it for the long term. I'm in it for helping people make the right choices for them and their families. And sadly, many people are misinformed. They are always breaking their mortgages, refinancing, not necessarily exhausting the option of blending. And it seems like that's where more and more opportunities exist today. So I point that out because I think it's really important that you deal with a mortgage professional that has a full view of options, has access to multiple lenders, and aren't just throwing you and pigeonholing you into one product because that's all they sell, okay? And, buyer beware. Understand that there are professionals out there that do a good job. There's many out there. I just saw Nikki Tadeo. She's on there. She's a great mortgage broker competitor, but a friendly competitor. And, if I ever come across a client that she's helped, I tell them, hey, you're in good hands. Deal with Nikki. And I assume she would do the same thing with me. I believe she would. And that's how you make sure you're in good hands. Seek out experienced people that have been in this business a long time. And listen, there's great new folks in the space that are mentoring under some very experienced brokers. But ask them, how many lenders do you deal with? How much volume do you do? How many applications do you look at? And there's not an application I haven't seen in my career. I've seen everything. Good, the bad, the ugly, the worse. But it's very important that you put yourself in a situation that gives you all options, okay? And I'd be happy to help out anybody. Have a great day, and we'll see you next week. Take care.